Cue the fireworks. I have fantastic news. There's a bill going through Congress that might allow us to have sales tax gains greater than we have now. We're going to go over that article next. We're also going to tell what's going on with this inventory issue. Is it lightening up or is it just tightening more? All next on Real Estate Daily. Welcome everyone. My name is Troy, and every day we go over the latest news in real estate, housing, and the mortgage markets. Now, before we jump into this, do me a favor. If you're out there and you're a buyer, a lot of you are sitting on the sidelines right now. Here's a fantastic read. Go below, click the link, and get a free buyer's guide. It is something that's it will help you through the process and make it a lot more stress-free. All right, so before I jump into everything here, I want to say that we had a big holiday yesterday, Memorial Day. We want to also, again, thank our veterans out there and the people who died for this country. We really, really want to honor you on a daily basis, not on a day basis. All right, so let's jump into it. This says House bill would incentivize home selling in efforts to boost supply. Now, this is how they're spinning it out there in Washington, D.C. Said bill would increase sales gain tax inclusion to $500,000 for single filers and $1 million for joint filers. Meaning, if right now you own a house and you were saying, hey, I want to sell it. Well, if you're one person on title, then you can receive up to $250,000 in gains and not be taxed on it. Anything over that is about 40% taxes that you're going to pay. It's bad. It's all bad, right? Now, if you are joint, meaning husband, wife, or two names on title, then it's $1 million. Right now it's $500,000, but now it's going to be, well, they're gonna vote on it, but it's going to be increased, hopefully, to $1 million. Now, this is enormous news because a lot of people out there are not even wanting to sell their homes because they can't take all their gains without being heavily taxed. We know that the government needs money, but this is not the way to do it. Not on the dream of home ownership. All right, so I'll go read a couple of things in here. It says the bill would increase, and we'll start right here. The bill would increase sales gain tax inclusion of $500,000 for single filers and $1 million for joint, according to its current language. Currently, single home owners will sell their home and can exclude $250,000 in gains in capital gains tax. And while duo or three or four, whatever, is $500,000. Now, it says that this bill was actually broached somewhere in 2022, and it was shot down immediately with the old Congress. But now we're starting to see, the blue and red team starting to work together. And so now we have a bipartisan bill that now is starting to gain momentum here. And hopefully we'll start seeing it going to the Ways and Means Committee. Once they say they write off on it, and we're continually seeing more and more support there, then it will go into the House of Representatives for a vote. Well, I'm excited about it. I don't know why the Ways and Means Committee would shoot this down. I get last time it was all blue team, but now the red team and blue team, I think will get together and we'll hopefully see some big movement here. This might spur on more people to sell, and that will alleviate or ease this housing issue that we're definitely having. All right, next article. It says, here's why nobody's willing to sell a home these days. This just came out 4 hours ago on CNBC. This is the head of Redfin, the CEO. And again, we're just saying the same things. We have a lot of macro issues going on. I've gone over this now for at least the month of May. And I said the three major issues that we're running into that we need to hurdle. Number one, it's the summer months. So we have all these graduations and people just don't want to move during that time or put their houses up for sale. Number two, we had the debt limit, which was hanging over us for the past 2 weeks pretty heavily. I'm hoping that an agreement, which was discussed on Sunday, the new bill was brought up to a lot of the congressmen and senators on Monday. And now they have 72 hours to make a decision, and it will then go to the House of Representatives, and they're going to vote on it, I think, on Wednesday or Thursday. If we can pass that in both House and Senate, and the president puts it into reality, signs off on it, then that is a big step forward on interest rates, and it might ease off. But last week we saw something that we didn't like to see, and we saw more inflation rear its ugly head. And the Fed came out, and now some of the Fed, directors in each one of these cities have come out and said, well, it looks like we definitely want to go ahead and raise the at the meeting 25 basis points the rate. And so that is not going to be good for the economy, and that's definitely not going to be good for interest rates in the housing market. We just need to figure out, the Fed cannot control this. It's getting to a point where they are our worst enemies, is the Fed. They're the ones that are printing money. They're the ones that are changing rates, and they're causing our lives to be this roller coaster. One minute we're happy, next minute we're not, and it's causing the market to go crazy. If you're in real estate, you know that the Fed has always been, somebody that we don't need. Let the market make its decision, not the Fed, which is not even really a federal government agency. It's a third-party agency that's making all these decisions. All right. This is an interesting article. Rent bargains in California. What do you get for $1,500 a month? Well, anyone out there knows that $1,500 a month ain't going to get you nothing in California, or it's going to get you a little studio, maybe a 1-bedroom. But I just thought this was interesting. Let's go take a look at, what $1,500 a month. It says 200 U.S. cities with the average of 782 square feet for $1,500 a month. 782 gets you a small 2-bedroom, 1-bath apartment for $1,500 a month. But let's go and see about the California here. This is very interesting. It says Los Angeles and Ventura counties, 10 cities averaging 539 square feet. 539 square feet is a fairly comfortable studio, or it's a small 1-bedroom, 1-bath. Okay, so if I'm looking at it, that's what 539 gets. But that's the average. But if I were to go in the city of Los Angeles, it gets me 423. That's not even a very comfortable studio for $1,500 a month. That's ridiculous. Now, if we go here to the city of Orange, 543, or basically anywhere in Orange County, you're getting 500 square feet. Again, it's a studio. So $1,500 just gets you that studio. So these are the crazy things. Look at this. I looked at it. San Francisco gets you 336 square feet. I'm a cramped studio with a bedroom. I mean, a cramped. You can get a husband and wife living in there, and they're looking at each other every second of the minute that they're together. It's just, there's no downtime. So this is what we're getting. Now, what is the worst place? It says, consider this. You could be an apartment hunting in Manhattan, where a New Yorker gets 243 square feet. You basically get a kitchen with a bed, with a pull-out bed, and a little toilet with a shower head. That's it. You're living literally in a small hotel bedroom. That's it. Ridiculous to see this. I know that it's only going to get worse out there, but it's just I can't imagine people living this way. Personally, you have to make more money. Pair up, which is I definitely talk about. People that are renting rooms out. You go out there, get a 3-bedroom, 2-bath, and then you just start renting a room out for $800 to $1,000, and then you have that common area where everyone can use a refrigerator and kitchen. You might get 1,000 square feet or 1,200 square feet. Makes way more sense than living in these little boxes, though. The advantage, of course, is that some people like to be private, and that's a private area. All right, let's go look at the rates on Friday. Yes, I just can't get over it. It just keeps going up and up and up. Now, this was pre-debt ceiling agreement. We're hoping to see that rates have gone down today. But if you look at this, I mean, this is a terrible, shoot up from May 11th, where they were at the FHA was 6.38, and then it comes all the way up to 6.85. I mean, you're just like this trajectory straight up. Actually, it's 6.71. I mean, literally in this month alone, we've gone up 0.5 percentage point in rates. And that is the other issue, is that we need the Fed to slow down, because if they slow down, then we have both scenarios, debt ceiling done and rates on the decline, because we're seeing the Fed kind of easing things, making it a environment in which we can see a possible breaking of the economy, meaning we have a lot of people out of work, and we're also seeing people spending a lot less money, which would help out the inflationary issues that we're having here. And then we're seeing rates go down again. So with that being said, guys, thank you very much for joining me today. If you have any comments, please comment below. Otherwise, I will see you tomorrow on Wednesday. It's going to be a short week, but it's going to be a fun-filled, packed week of real estate.